Coming up on Global Business, the Asian Development Bank raises its growth forecast for developing Asia and adds that China's economic recovery has brightened growth prospects in the region. Credit Suisse chairman apologizes for taking the Swiss bank to the brink of bankruptcy as he faces shareholders' wrath over the demise of the once proud flagship bank. IMF data shows the proportion of the US dollar in global foreign exchange reserves has shown a downward trend in the past 20 years. From CGTN headquarters in Beijing, this is Global Business. I'm Zhu Jifeng in Beijing. The Asian Development Bank has raised its 2023 growth forecast for developing Asia and said that China's economic recovery has brightened growth prospects in the region. The Philippines-based lender expects the region to see an economic growth of 4.8% this year, up from its 4.6% projection in December. Developing Asia refers to 46 members of the Asian Development Bank. China accounts for about half of the region's growth. The bank said in the report that developing Asia's economic prospects are markedly improving with rapid reopening in China, and regional tourism will also benefit, where China was the main source of tourists until 2019. In the meantime, the bank forecasts China's GDP to grow 5% this year and 4.5% in 2024, compared with 3% last year.
There were very good reasons to be a little bit more optimistic now about the recovery process than we were back in our last forecast, which was still done during the pandemic period. The accelerated lifting of pandemic restrictions in December gave us reason for hope that the recovery can be expedited. We have also looked at the data for the first 2 months of this year, and we see good signs of economic recovery, which also factored into our forecast. In addition, we also looked at the steps the government is taking to stabilize the housing market, which were, in our view, in the right direction. We also saw monetary policy and further loosening of required reserve ratios, which we thought would support growth. And we were very encouraged by the public pronouncements of the government after the 2 sessions, in which the government talked very strongly about promoting domestic recovery and promoting aggregate demand. So we have taken all of these things into account in increasing our projection for this year.
China's foreign ministry reiterated on Monday that the country will pursue win-win cooperation and inclusiveness. Responding to the economic outlook forecast made by various international organizations, the ministry spokesman said, besides pursuing high-level opening up, China would also firmly oppose any decoupling attempts. Let's take a listen.
Many countries are concerned that the U.S. will engage in decoupling, impose trade protectionism, and destabilize the global industrial chain, which is detrimental to world economic growth and serves the interests of no country. China will unswervingly stick to opening up at a high level, provide the world with more certainty through its own stability, as well as more fresh opportunities through its new development. We are ready to work with the international community to pursue a win-win cooperation and inclusiveness, oppose decoupling attempts, and build an open world economy.
Optimism on the state of the economy is rising steadily among bankers, entrepreneurs, and depositors, says a new survey from the People's Bank of China, the central bank. More than 60% of the surveyed bankers believe that the macro economy has performed relatively well in the first quarter of this year and nearly doubled on a quarterly basis. Loan demand, bankers say, saw a double-digit growth in sectors such as manufacturing, retail, and real estate. For entrepreneurs, an improving business climate buoyed their fortunes in the first quarter to a one-year high. As for Chinese depositors, there has been a steady increase in the number of people willing to spend on big-ticket items and purchasing homes. The China Import and Export Fair, also known as the Canton Fair, is scheduled to be open next week. It will be the first Canton Fair held on-site since China downgraded its COVID-19 response. Sun Tianyuan reports.
The Chinese Commerce Ministry has announced the resumption of all on-site activities at the Canton Fair in Guangzhou. The event, also known as the China Import and Export Fair, has been mainly held online since 2020 due to the pandemic. An official underscored the importance of the event for China's opening up process and as a platform for foreign trade.
These
will be the first on-site exhibitions at the Canton Fair since China downgraded its COVID measures. The full resumption is of great significance to both China's development and the global economic recovery.
With much more relaxed COVID policies, companies from home and abroad can once again enjoy all the benefits of face-to-face meetings. An official from China's foreign ministry noted a surge in visa applications. She said a special process was put in place to make it as convenient as possible.
For overseas business people who have received official invitations from the Canton Fair, they may apply for visas at any available Chinese embassy or consulate. We also welcome their relatives to visit China together.
About 34,000 enterprises from over 200 countries and regions are expected to attend. That includes some 9,000 companies who will be participating for the first time. The affair will be held in 3 phases to exhibit on a range of products and services, including industrial goods, daily commodities, and textiles. We're also expecting exhibitions focused on new energy vehicles and products for seniors and children. Sun Tianyuan, CGTN, Beijing.
Moving on to some other business news from across the country. The 3rd International Consumer Products Expo will start from next week in China's Hainan Free Trade Port on a much bigger scale and a larger group of participants from 60 countries and regions. China's new energy vehicle sales are expected to grow by 25% on a yearly basis during the first quarter of this year, an industry association said on Tuesday. Significantly, this is the first quarter of NEV sales after China ended a decade-long government subsidy for vehicle purchases. The People's Bank of China Governor Yi Gang has reiterated that the central bank will take necessary steps to ensure stable prices and financial stability. Yi stressed that stable prices would mean a modest inflation and a stable yuan against a basket of currencies. You're watching Global Business, coming up in the program. IMF data shows the proportion of the US dollar in global foreign exchange reserves has shown a downward trend in the past 20 years.
Exploring the latest trends in the consumer sector, the brands most preferred by customers, and the stories behind the names. Building a closer connection between a supersized consumer market and global brands. All eyes are on the 3rd China International Consumer Products Expo in Haikou, as leading brands gather to share insights and discover new opportunities from a China opening wider to the world. Join our special coverage of the event as we bring you an in-depth look at cutting-edge consumer trends that will shape a better life for the future. Only on CGTN.
Let's move on to the global banking sector and the takeover of Credit Suisse, which is now facing another storm. Credit Suisse's chairman apologized for taking the Swiss bank to the brink of bankruptcy as he faced shareholder fury over the demise of the once proud flagship bank. The hastily arranged takeover by Zurich-based UBS, for which Switzerland invoked emergency legislation, bypassed Credit Suisse shareholders who would otherwise have had a say and all but wiped them out. For more on the Credit Suisse shareholders meeting, let's cross to our reporter Julia Lubova in Geneva. Julia, what solutions have been brought up by the Credit Suisse shareholders to the developments of the past few weeks at the meeting?
Well, that's right. So on Tuesday, Credit Suisse is having its final annual general meeting in Zurich. since, of course, it's been announced that the bank will be taken over by its rival UBS. And it is at this meeting that Chairman Axel Lehmann and Chief Executive Ulrich Körner, for the first time, they publicly addressed the shareholders since, of course, this takeover was announced. But the chairman apologized for the situation that the bank has ended up in. And he faced, of course, the fury from angry shareholders who demanded answers to why this happened. Well, there were even some protesters outside of the venue where the meeting is taking place on Tuesday in Zurich. Well, Chairman Axel Lehmann said that he was truly sorry and that there were only two options, really, the deal or bankruptcy for the bank. So many of the shareholders say that they lost thousands of Swiss francs because the shares, they plunged from 12.78 Swiss francs per share in February 2021 to 0.76 Swiss francs of what they will get in this deal now. Well, nonetheless, many of the shareholders are present at this meeting in Zurich, which is still ongoing throughout the day. And so far, it's been announced that 5 Credit Suisse board members will not stand for re-election. And also the shareholders voted in favor of the 2022 compensation report with 50.6% voting in favor. So the meeting is indeed still ongoing. It will be going throughout Tuesday and more results are expected later this day.
Thank you very much for your update, Julia Ripova, for us in Geneva. Across the Atlantic, U.S. Treasury Secretary Janet Yellen told reporters at an event on Monday that deposit outflows from small and medium-sized banks were diminishing, but she was closely watching the situation to prevent contagious bank runs. According to Yellen, the recent moves taken by the Treasury and Fed have succeeded in strengthening confidence in the banking sector, where there are no fundamental problems with the banking system, she said. Capital flows to Hong Kong have been surging in the wake of the banking crisis in the US and Europe. The collapse of the Silicon Valley Bank and Credit Suisse has dented the confidence of global investors, many of whom are now pinning hopes on Asia in the hope of more stability. Richard Kimber has more.
Riding out the storm. Rattled by high-profile banking collapses in the US and Europe, economists say there are high hopes among investors for finding a safe haven in Hong Kong. In the weeks following the collapse of Silicon Valley Bank, state-owned Chinese lenders have seen steady gains on Hong Kong's stock exchange. The city's monetary authority says the impact to the local banking sector is insignificant.
In general, the banking industry over here in Hong Kong and also on the mainland China are pretty stable. It's very stable. The banks have pretty good balance sheet, and the Chinese government's monetary policy in the last several years has been very stable. And Hong Kong economic situation are very, very different than that in Europe and also in the US. So in general, one would say that the situation here is pretty well isolated.
China's central bank is pledging to prevent similar volatility among the country's biggest lenders. It's accelerating the introduction of a financial stability law to ramp up regulatory oversight.
But I think it fortifies the notion that China have the better banking system. We don't have this kind of system where banks have an excessive risk-taking and then basically go belly up and take everyone else down.
The global investor uncertainty isn't just affecting big institutional investors. It's also boosting demand from individual banking customers. HSBC is keeping open 3 of its local branches at the weekend, including opening on a Sunday for the first time in over a decade. It says there's a surge of interest for opening new accounts from visitors to the city, especially those coming from the Chinese mainland. It says the number of non-local customers more than doubled in February. Hong Kong is also attracting potential investment from some of the world's wealthiest people. Last month, more than 100 leaders of high-profile family offices gathered at Hong Kong's Palace Museum for a newly organised summit. The government is rolling out a range of measures, including tax breaks and philanthropy programmes, to make it more attractive for them to open operations in the territory. With the financial world facing increasing volatility, Hong Kong is hoping to benefit from an increasing need for reliable investment alternatives. Richard Kimber, CGTN, Hong Kong.
Moving on to some other headlines from across the world that we're tracking at this hour. Brazilian economists have raised the country's inflation forecast for 2023 to 5.96%, slightly higher than earlier, but maintained the 2024 estimate at 4.13%, according to the central bank survey published on Monday. Construction spending in the U.S. dropped by 0.1% in February from January after a fall in residential construction spending, according to data released on Sunday by the U.S. Commerce Department. And exports from Germany rose by 4% month-on-month in February to $150 billion, according to official data released on Tuesday. The better figure was achieved largely due to easing supply chains and stronger demand from China and the U.S. To understand more about the current problems facing the global banking sector and the increasing attractiveness of Hong Kong to international investors, let's bring our guest Wang Yaojing, Assistant Professor of Economics at Peking University. She joins us on the phone. Well, Ms. Wang, has the banking crisis in the U.S. and Europe influenced capital flows across the world?
Well, thank you for having me. So what has happened in the banking sector in the U.S. and Europe? What is more worrying is how governments and regulators reacted to these crises. So the Fed has promised all deposits from Silicon Valley Bank, but continued to raise interest rates, exposing smaller and regional banks to even higher risks. And the Swiss Monetary Authority, FINMA, authorized the writing down of 16 billion AT1 bonds from Credit Suisse. These are all negative signs for investors who might want to reconsider their investment destination.
So after these incidents, are we seeing international capital flowing to Hong Kong? What are Hong Kong's main attractiveness for foreign investors?
Well, we don't have the numbers yet, but after what has happened to the 16 billion Credit Suisse bond write-down, regulators from Hong Kong and Singapore has reaffirmed debt seniority, which is much more reassuring to investors. It is only rational for investors to allocate capital to a place with more certainty.
Okay, Ms. Wang, thank you for your insights there. We'll talk to you later on in the program for more other questions. Meanwhile, the U.S. dollar vibrated on Tuesday after a slump in U.S. manufacturing activity last month. An official survey showed on Monday that the country's manufacturing activity fell to its lowest level in nearly 3 years in March, which pointed to further signs of a slowing economy. The weak and impressionable dollar was also affecting global financial crisis. Gold futures on the COMEX division of the New York Mercantile Exchange rose on Monday as the dollar weakened. According to data from the International Monetary Fund, the dollar's share of global foreign exchange reserves has declined over the past 20 years. In the fourth quarter of last year, the dollar accounted for 58% of global reserves, much lower than the 70% around year 2000. The US dollar has dominated global trade and capital flows for many decades. However, many nations are now looking for alternatives to the greenback to reduce their dependence on the US dollar. Trying to get some independence within the global trade and payment system may be one of the reasons behind the recent de-dollarization moves. Our Timothy Pope sat down with Joe Hao, chief economist at Guotai Junan Securities. Take a listen.
Interest rates going up, and then this banking crisis on top of that. It has highlighted in a way how tied the global money markets are to the US dollar. Is there a desire among some economies to break away from that?
I have doing research on the global monetary payment or global kind of financial system for a long time, and I found that the core is the dollar kind of dominance. So basically everything is about the dollar dominance. So if you want to really get some independence in the global financial system, you have to think about get rid of the US dollar dominance as well.
For more insights on the move being made by global economies to shift away from the US dollar, let's bring back Ms. Wang Yaojing, Assistant Professor of Economics at Peking University. Thank you for talking us on these topics. So let us understand more about the negative effects of the dollar's dominance in global finance and global trade.
Sure. Given the 5% Fed rate right now, one of the most direct effects would be a credit crunch, which is very likely for the time being. This means that the US dollar would be incredibly expensive to borrow, and all of the world would be short on US dollars as they would flow to where the rates are high, which is the US right now. And trade from any two countries would be affected. Foreign companies that finance in US dollars would be affected. Even governments who often borrow US dollar debt would also be affected.
Is there a dollar decentralization or the de-dollarization trend going on in the world, and why?
Well, it is only rational for countries to develop an alternative trading channel other than the dollar to avoid risks associated with one country, to cut off contagion of financial crisis, banking crisis from other parts of the world. It is simply just more efficient and subject to less uncertainty for commodity exporters and manufacturers to exchange products and services with their own currency. And countries should have more choices on which currency to use in trading with another country.
All right. According to the IMF, the dollar's share in global reserves dropped from 70% in year 2000 to around 58% by the end of last year. So there's a clear trend of dollars or role declining in the world. But why is it difficult to challenge a dollar's role in global finance and trade settlements?
As you just said, dollar is still more than half of the world's foreign exchange reserves. And as of what we speak right now, US dollars is still 84% of all international trade. So there are some economies of scales and path dependency here to some extent. But the more the dollar is weaponized to sanction other countries, the more likely other countries will want to deviate from the dollar system once they have the chance.
Thank you so much for your insights. That's Ms. Wang Yaojing, Assistant Professor of Economics at Peking University. The spring is here. Let's turn to the tourism industry. After years of pandemic-related travel restrictions, China's reopening has spurred a surge in demand for air travel. But this post-COVID-19 travel boom has also pushed up prices. For Thailand, a country that is heavily dependent on tourism, inflation and ballooning travel costs could threaten its fragile recovery. Our correspondent Dorsika Saukau reports.
After almost 3 years, Khao San Road in Bangkok is emerging from the COVID tunnel. The music upbeat, the lights shine bright, there's laughter and good times. It's hard to imagine that not long ago, this street became a ghost of its former self, a tableau of desolate streets and shuttered businesses. Now, local businesses and merchants are gearing up for what is expected to be a busy season.
This tourism boom has been a long time in the making, especially for a country like Thailand. Tourism targets set by Thailand's government have so far been met. The recovery can be felt just by walking through the streets of Bangkok. But what can also be felt is inflation, and tourists are feeling the squeeze.
So the cost and the capacity of expenditure is different than we had back in 2018. However, yes, we seem like 3 times more expensive everything, approximately.
Although inflation in Thailand came in at 3.8% in February, it is not reflected in the prices. From flights to hotels to dining out, just about everything is more expensive. Flights from China, Thailand's biggest tourism market by far, still hovering at 1.5 times pre-pandemic prices. Some travel companies reporting increases of up to 70% in hotel rates due to the soaring demand of Chinese guests since China's reopening. But some in the industry say that high hotel daily rates could be short-lived.
There are entrepreneurs who raise prices due to market conditions, but when they are confident that they are able to run their businesses after years of losses, they will have to consider their competitors. So Thailand should return to a state where travelers feel that the price is not too expensive.
Although price hikes are helping hotels recoup substantial losses from the past 3 years and potentially help drive further growth, what hotels view as growth comes at a detriment to the finances of travelers. According to Dragon Trail, the average amount spent per Chinese traveler has increased up to 3 times more than what it was during pre-pandemic times.
The government has not yet been able to control the tourism market well enough, so many businesses have seized the opportunity from the supply shocks. It's a golden opportunity for them to set their own prices for products and services.
Pent-up demand is driving this industry, fueled largely by the Chinese market. But come low season, it will become an industry that will be tested by recession, high travel costs, and inflation. For now, it's high times, it's adrenaline, as tourism is having its moment. Dusita Saogao, CGTN, Bangkok, Thailand.
Now we wrap up this edition of Global Business. Thanks for watching. After Yuzhong CGTN continues with more news and views. Stay with us.